What is accounting? Accounting is the process of recording, classifying, and summarizing financial information in a way that is meaningful to the users of accounting information and enable them make relevant financial decisions. And we have 6 procedures of accounting, which includes recording, classifying, summarizing, analyzing, interpreting, and communicating of accounting information. Now I'm going to be explaining these 6 levels of accounting. Let's begin with recording. Recording. This is the process of systematically and chronologically entering financial transactions into the accounting record. It's usually the journal. And now I love how these 6 procedures each go from stage to stage. Now let's look at classifying. Classifying is the process of entering transactions of similar natures into the appropriate ledger, meaning those information which has been recorded into the journal would now be transferred into the ledger. And now with the journal entry, we could have like house rent, electricity, salaries, and other transactions that might have gone on in the business. Now, when they are being at the level of classifying, when they are being transferred into the ledger, we would now have our different ledger accounts, such as maybe a salary account. So now all transactions relating to the salaries will be put in that particular ledger. So you see what I mean by they go from stage to stage. So recording has to do with the journals, and now classifying has to do with ledger entries. Now let's move to summarizing. Summarizing has to do with presenting those entries in a manner that is understandable and useful to the users of financial information. And now that's usually the financial statement. So at the level of summarizing, you're preparing your different financial statements, which include we have the cash flow, we have the statement of financial position, we have the income statements, like there are quite a few, and we'll get to them in other videos. Then we have analyzing. Analyzing has to do with evaluating the financial statement. Now, those financial statements which you prepared at the level of summarizing would now be analyzed to draw out useful insights for the users of the financial information. So the importance of analyzing is because at this level we get to see the strengths and the weaknesses of the business. And if someone is making a financial decision, they have clarity on what's going on in the business. Then we have interpreting. Interpreting has to do with explaining the data that was analyzed. So the data which was like the analysis which was gotten from the level of analyzing the financial statement would now be interpreted, like explained at this level, so people have better understanding. And finally, we have communication, communicating. Communicating, this has to do with providing the financial information to stakeholders who need those information. So now, there's no point in preparing or there's no point in going through all the processes of creating a financial statement, analyzing it if there will be no one who uses it. So at the point of communication, this is where the information that has been prepared reaches its final users. And now, I hope you get the reasons why I said that the procedures of accounting, they go from level to level. You can see how they are all interconnected. It's quite interesting. Now let's move to the objectives of accounting. So like the importance of accounting. Why do we need accounting? We have one for informed decision making. So the main objective of accounting is that the information prepared should get to the final users, right? And this is to enable them make informed decisions of whether they should invest, whether they should not invest, whether they should provide the entity with credits like loans or they shouldn't, like whether we should purchase from the companies or not. Even the employees of the company, they get to make informed decision on whether they want to keep working with the organization or look for better opportunities. Then we have performance evaluation. Now, this draws us back to the procedures in which we talked about analyzing the financial statement. So here we evaluate the financial health of the organization. Like we analyze their balance sheet to check the company's assets, its liabilities, and compare them. Like we draw a lot of conclusions from that analysis. So that's performance evaluation. Then determine the solvency position of the entity. So now we analyze the balance sheet and the profit or loss account and provide useful information to decision makers on the current or future long-term and short-term obligations of the business. So what are the loans that the business would have to settle at a certain point of time? What are their credits they might have to settle? And what is the current ability of the entity to meet up with those obligations? So at that level, that's what we are checking. Can this business meet up with its credit obligations, or is it giving excuses to the loan company which they got money from? So investors have to check all that before they can invest. Creditors, financiers, they have to know whether they want to give the entity credit at this level. If their credit is bad, would you be investing? So that's what we check. And then we have investor and creditors confidence. So imagine an entity has all its financial information ready, its financial statement ready, you can access it at any point in time. It will build trust and it will build the credibility of the company. So at this level, we're talking of investors and creditors confidence. So let me go to my notes. Accurate and transparent financial reporting helps build trust and credibility with external stakeholders. Who are the stakeholders? They are the people who work for the company, they are the people who invest. Basically, stakeholders are the persons who interact with the business, has relations with them. So those are the stakeholders, and since they rely on such information for decision making, like I said, if this information are available to stakeholders at different points in time, then I believe it builds trust and credibility. So that will be all on our lecture today. See you in our next video. If you enjoyed the video, please please subscribe. I enjoy teaching, so I hope you enjoyed learning. Thank you.